Alright, now let's have a look at the next pattern, which is a bullish pattern. It is called as a piercing pattern. So till now we have looked at the hammer and the bullish engulfing pattern. And those two patterns itself are enough for you to get started with trading. But there are more patterns that we need to look into. One of them is the piercing pattern. So it is also a bullish pattern. When we say bullish, let me repeat this again. When we say bullish, it means that the market is either likely to go neutral or likely to go up. So in other words, the previous downtrend is likely to end. So any reversal doesn't mean that the market is going to completely reverse. It simply means that the previous trend is likely to end. Okay? So let's have a look at the piercing pattern. So if you understand the bullish engulfing pattern, it is not difficult to understand the piercing pattern. Okay? So let's have a look at this pattern. It's a 2-candle bullish pattern. So there are 2 candles and it's a bullish pattern. The first candle is a long black real body. The first candle here is the long black real body. Second candle is a long white real body that ideally opens below the low of the first candle but closes above the midway point of the first candle. So let's try to understand it. The second candle is a white real body, long white real body which opens below the low. So this is the low of the black candle and the opening is below the low of the previous black candle and the closing is above the midpoint of the previous black real body. So this dotted line is the midpoint of the black real body. This is not the midpoint of the entire candle. It's a midpoint of the black real body only. And our second candle closes above the midpoint of the black real body. Okay? It must come after a downtrend, obviously, just like the hammer and the bullish engulfing pattern. This must come after a downtrend. Shadows are not much of a concern. I ignore the shadows normally in this pattern. So now what is the difference between the piercing pattern and the bullish engulfing pattern? So if this candle would have closed above the opening, let's say like this, then it becomes a bullish engulfing pattern because then the entire white real body is engulfing the prior black real body. So that's the main difference between the piercing pattern and the bullish engulfing. Just looking at this pattern, you would know that the bullish engulfing pattern is more powerful than the piercing pattern. Nonetheless, you cannot ignore the piercing pattern because it is a strong bullish pattern. So as in the bullish engulfing pattern, the low of the pattern becomes support area, so we can keep our stop loss below that. And the closing of this pattern is our entry point. So the entire pattern's low becomes support and we can take the entry here. So that's the piercing pattern. It's not very difficult. If you understand the bullish engulfing pattern, you can also understand the piercing pattern. So let's have a look at some examples. So this is Coal India weekly chart. This is an example of a piercing pattern. So it's coming after a nice downtrend. 1, 2, 3, 4 consecutive black candles, that too on a weekly chart, which means that for an entire month the price has been falling, and suddenly you have this piercing pattern. Now notice that the opening of the white candle is not below the low of the prior black candle, which violates one of the conditions of the piercing pattern. We said that for a perfect piercing pattern, the opening should be below the low of the prior black candle. But in this case, that has not happened. So we will call it as a variation of a piercing pattern. It is not a perfect piercing pattern. It's a variation of a piercing pattern because the closing is above the midpoint of the black real body. That is the reason why the piercing pattern, we can consider this as a piercing pattern. It is not a bullish engulfing pattern because the closing is not above the opening of the prior black candle. So we can't ignore this pattern because it is not a perfect piercing pattern, but it's a variation of a piercing pattern because the opening is not below the low of the prior black candle. So if we were to take this trade, we would keep our entry here. Our stop loss would be just under the low of this pattern. And then we would aim for preferably this resistance. So this is our R1. Okay. So that would be the trade. It is not a perfect piercing pattern, but since this is occurring on a weekly chart, I am giving it that weightage. So in this case, as you can see, although it was not a bullish engulfing pattern, but it was a piercing pattern. So these little nuances we need to understand. Some people who have half knowledge about candlesticks, they might look at this pattern and they say, oh, it is not a bullish engulfing pattern, so I am not going to take this trade. But they are missing out on this rally because they do not know what is a piercing pattern. But now we know what is a piercing pattern. So we can use that knowledge and take the trade and profit from that knowledge. Okay. So that was a quick example of a piercing pattern on a weekly chart. Remember, candlesticks can be used on any time frame, on any asset class, on any financial instrument. Alright, now let us have a look at the types of piercing patterns. In the previous video, we discussed the definition of a piercing pattern and we also looked at an example of a variation of a piercing pattern. So in this case, let us have a look at these 4 patterns. Of course, all of them are coming after a downtrend. Okay. So let's look at different types of piercing patterns. So in this case, one thing to notice is that all of them are closing above the midpoint of the prior black real body. So all of them are piercing patterns. That is one. Second, the differences lie in the openings of these candles. So this candle opens below the low of the prior black candle, but within the shadow of the prior black candle. This candle opens below the low of the prior black candle, but below the low of the prior black candle as well. So this one is a perfect piercing pattern. This one is an imperfect piercing pattern, but a variation of a piercing pattern. What is the difference between this pattern and this pattern? This opens almost near the low of the prior black candle. This opens just below the low of the prior black candle. So both of them are variations of piercing patterns because their closing is above the midpoint of the prior black real body. Okay? So again, this is also a variation of a piercing pattern. Again, this one does not have any shadow, but the opening is within the prior black candle's shadow. So this is again another variation of a piercing pattern, but the closing has to be above the midpoint of if the closing is not above the midpoint of the prior black real body, it is not a piercing pattern. And of course, all of them should come after a downtrend. So let's have a quick example of the piercing pattern. Only this pattern among all of the piercing pattern is a perfect or a classic piercing pattern. Okay. Let's have this example. So now this is not a perfect piercing pattern because the opening of the white candle is not below the low of the prior black candle. So it is within the shadow, but not below the low of the prior black candle. But the closing is nice. The closing is above the prior black candle's midpoint. The closing is not beyond the opening. Otherwise, it would have become a bullish engulfing pattern. So it's a nice downtrend. It's a daily chart of NMDC. It's an example of a piercing pattern. So if I were to take a trade here, I would keep my stop loss under the low of the entire pattern. Okay. So that would be my risk. My profit target would be here. This is the resistance here. This is where the bears are sitting. And that would be a nice reward to risk trade. Okay. So look how the piercing pattern works. So if you have the correct knowledge of piercing pattern, you would definitely take this trade. understand that this is a risky trade because it is not confirming any prior support area. We have seen multiple examples in bullish engulfing pattern and the hammer where if the candlestick pattern confirms a prior support area, it adds more weight to the trade. So although this was a risky trade, but still it is coming after a downtrend. It satisfies almost all criteria of the piercing pattern. Only thing is that it is not a perfect piercing pattern because it is not opening below the low of the prior black candle. So we can take this trade, if we are an aggressive trader, we can take this trade as discussed here, okay? Alright, let's have a look at what is the difference between a normal and a classic piercing pattern. We have touched upon this, but let's look at this closely. So, if the opening is below the low, below the closing of the prior black candle, but within the shadow, within the lower shadow of the prior black candle, I would say that's a normal piercing pattern. I would not say that it's a perfect piercing pattern because for a perfect piercing pattern, we need the low to have, we need the opening of the white candle to be below the prior black candle's low. Okay. So I would call this a normal piercing pattern or a variation of a piercing pattern. I would call this as a perfect piercing pattern or a classic piercing pattern. The main condition is where does the white candle open. If it opens below the low of the prior black candle, it's a perfect piercing pattern or a classic piercing pattern. If the opening of the white candle is within the shadow of the prior black candle or near the closing of the prior black candle, then I would call it as a normal piercing pattern or I would call it as a variation of a piercing pattern. Okay? But in any given case, both should come after a downtrend and both white candles should close above the midpoint of the prior black real body. Remember, I will repeat this again. The midpoint should be the midpoint of the prior black real body. It should not be the midpoint of the entire candle. And we ignored the shadows here. Okay? So let's quickly have a look at another example. Now, identify whether this is a perfect piercing pattern or a normal or a variation of a piercing pattern. If we look at these two candles, I would say it's a perfect piercing pattern because the low is just under the, because the opening of the white candle is just under the low of the prior black candle. So I would say it's a perfect piercing pattern. Another point to mention here is, although I ignore the shadows, but if we have a look at the shadows here, the upper shadow is very small and the lower shadow is more than twice the height of the upper shadow. So the lower shadow indicates bullishness and the upper shadow indicates bearishness. So this candle has more bullishness built into it than bearishness. Okay. And it is coming after a long prolonged downtrend. It's a daily chart, so it's quite a higher time frame. Okay, it's not an intraday chart. So if we were to take a entry here, we can keep our stop loss just under the low of the piercing pattern. And then we can expect the price to reach these highs. Notice the hammer here. This hammer is a classic hammer which did not work out. Which did not work out in a sense the stop loss was hit, but the hammer's low was respected by the piercing pattern. So if we were to take a long position on this hammer by keeping our stop loss below the low of the hammer, our stop loss would be hit. So that is the reason why it is very important to keep a stop loss. But if we look at the piercing pattern, it is confirming the support area created by the previous hammer. Okay, so if I have a piercing pattern which is confirming the prior support area created by a prior candlestick signal, it adds more weight to my candlestick pattern. So I would be more confident trading this piercing pattern than I would be confident trading this hammer. Okay, Now, let's come back to this candle. Is this a hammer? Yes, it is a hammer. So if I draw a support line here, the hammer is confirming a support line. So if I don't ignore these three candles, if I just have this hammer, the hammer is confirming the prior hammer support area. So that gives me confidence to take the trade on the hammer. But in this case, my stop loss was hit if I had taken a long position on the hammer. If I look at this hammer, ignoring all of these candles, I would not take this trade because it is not confirming anything. So this hammer, I am anyways not going to take the trade. This hammer, yes, I would take the trade, but my stop loss would be hit. This piercing pattern, definitely I would take the trade, considering the fact that it has confirmed the prior support area. Now, one negative for this trade is that, look at this. This might become resistance. If the price manages to close above this resistance, then it is clearly headed towards the second resistance point. Okay, so a lot of signals here, but the focus of this video was not the previous hammers. The focus of this video is to look at the piercing pattern itself. Okay, confirming the prior hammers support area. Okay, so if I take the trade on the piercing pattern, see, this resistance has proved important because that is where the price has stalled. So we need to be vigilant of what is happening at that level and then act accordingly. If I were there, I would exit near this price point, which is 1400, which is a round number because it's having two zeros at the end. And it seems to be a price where the price starts to stall. Okay, so this piercing pattern was important in this case. Right, now let us have a look at the piercing pattern psychology. Okay, we need to understand what is happening on this pattern. Okay, so the market is in a downtrend, so the bears are happy. As we discussed before, on the opening, there is a lot of market activity on the opening and closing of any candle. So let's assume this is a daily candle. So the market opens here, the bears are happy, and the market closes here. The bears are even more happy. They are in profit now. Look what happens the next day. The next day, the market opens even below. So on this opening, the bears are even more happy because their position is in profit now. But by the time the day ends, the market has closed above the midpoint of the previous black real body. Okay, so now the bears are nervous. Okay, in fact, most bears are thinking of exiting their positions because for them, those people who bought here, for them only this much has been the profit. Whereas yesterday they were having this much of profit. So they have seen their profits diminish, so they may want to exit the trade. That is why when you reverse a short position, you are into a long position. So that is why the market is likely to go up. So that is the psychology that is happening on this piercing pattern. That is why it is a bullish engulfing pattern. That is why it's as good as a bullish engulfing pattern. So if we draw a support line here, this is where the bulls came back into the market and the price was pushed up, which is the reason why we call this as the support created by the piercing pattern. So we have to keep our stop loss just under the low of the piercing pattern. The lowest low of these two candles becomes our support area. So let's quickly have a look at an example. So this is a chart of Hero Motor Daily. So the price is coming down. You have a variation of a piercing pattern. This candle closes above the midpoint of this long black real body. This is our stop loss. This is our entry. And that can be our target. So almost 2-to-1 reward to risk trade here. That's our risk. This is not a perfect piercing pattern because I would like to have the opening of the white candle just below the low of the prior black candle. So this is not a perfect, this is a normal piercing pattern. It is not a perfect piercing pattern. Another thing is to notice is that this pattern does not confirm any prior support area. So it's a risky trade. It's an aggressive trade. Okay. In this case, it has broken the resistance in just a few candles. Almost in a week, your target was hit. So 1, 2, 3, 4, 5, 6. Within 6 days, you have achieved your target with not a single black candle in between to interrupt that trend. So that is why a piercing pattern, even if it's a normal piercing pattern and not a classic or a perfect piercing pattern, still it has the potential to take the market up. Okay. Alright, now let's have a look at the strength of the piercing pattern. So we have looked at this slide before. Out of the 4 patterns, this pattern is the one which is a perfect piercing pattern or a classic piercing pattern. So I would say this is more stronger than the other 3 because the opening of this candle is below the low of the prior low of the black candle. So the bears who sold here are very happy here, and they are even more happy when the market gaps down and opens here. But the fact that it closes above the midpoint of the black real body goes to show that the bears have experienced the maximum pain here, because here you still have the opening within the shadows for all these other 3 patterns. So I would say this would be the strongest of all the 4 piercing patterns mentioned here. But nonetheless, all of them are piercing patterns, and we should not ignore this because the low of the piercing pattern can become very good support as seen in charts previously. So let's quickly have a look at an example. So this is Godrej Consumer. It's a daily time frame. So the market started going down from here. Nice downtrend. A piercing pattern here, not a perfect one, but the close is above the midpoint of the black real body. So you have the entry point here. You have the stop loss here. And you have a nicely defined target area. Okay. So our entry, our stop loss, and our profit target. Probably this is respecting the support area here. Yes. So that adds a bit of weight to the pattern, because this is where the price turned after this candle. You have 5 consecutive white candles, so it's an important low. So that's the support area created by this candle, and that support area has been respected by the piercing pattern. None of the 2 candles has been able to close below this support line. The black candle has just closed near that line, but it has not closed well below that line. So we cannot call it as a decisive break of the support. So that is why this piercing pattern is important. Even though it's not a classic piercing pattern, but still we can count it as a normal piercing pattern or a variation of a piercing pattern and expect the price to go up from here, which is what happened. Okay. So it has broken this support on this candle. Okay. So it took 4 or 5 days, maybe 1.5 weeks. That's it. Okay. Alright, now let's have a look at the special piercing pattern. Special piercing pattern is a very rare pattern. This is how it looks. It comes after a downtrend. It satisfies all the conditions of the piercing pattern. What is different here? Both the candles have no shadows. Now this is going to be a very rare situation. However, when this kind of a situation comes, it is a very strong piercing pattern, because clearly you can see the shift in psychology from the bears taking control over the market to the bulls taking control over the market. So the bears who went short here, they took the price down. So on this day, the bears were in complete charge of the market. And suddenly, it's all bulls on the next day. So that is why the special piercing pattern is very powerful. it is very rare. Let's look at an example here. It's not a special piercing pattern because it has shadows. So, but this is a piercing pattern, and that too a perfect or a classic piercing pattern because the opening of the white candle is just near the low of the prior black candle. We can't say it's below the low, but it's just near the low. We can qualify it as a perfect piercing pattern. Of course, the closing has to be above the midway point of the prior black real body. One cause for concern is the shadow here. It's quite a long upper shadow which indicates some level of bearishness. Usually for a piercing pattern, I don't look at shadows, but in this case, if the candle doesn't have any lower shadow, but has quite a good amount of upper shadow, I take that into consideration, especially given the fact that this pattern is not confirming any prior support area. If this were confirming any prior support area like this, then I would be very confident here. But in this case, it is not doing that. So I would give some weightage to this small upper shadow, which indicates bearishness. So that would be our R1. So that would be the entry, and our stop loss will be just under the low of the entire pattern. Remember, if both of these candles did not have a shadow, that would make it a special piercing pattern. Okay. Now, this is not R2 because R2 is here. The actual R2 is here. If we draw this line, then we take this line forward. So this is called as a gap. This is called as a price vacuum. Whenever something like this happens, then the entire window becomes a resistance area. So we can't call this as R2. This is the actual R2, the entire falling window. This price gap is called as a window in Japanese candlesticks terminology. So if we are going long here, we should aim for this resistance zone. Okay. This is a daily chart of Federal Bank, so quite a long time frame. This is not an intraday chart. In this case, it was successful in breaking all the resistance areas. So you can see how powerful the piercing pattern can be, even without confirming any prior support. Okay? Alright, now let us have a look at the non-piercing patterns, which means that patterns which are not piercing patterns. So assume that both of these patterns are appearing after a downtrend. Okay. So what is this? This is not a piercing pattern because it is a bullish engulfing pattern. Normally in a piercing pattern, the close is above the midpoint of the prior black real body. So if the closing of this candle were somewhere here and not here, then I would call it a piercing pattern. Okay. Since the closing has been above the open of the prior black candle, it becomes a bullish engulfing pattern. So that is why this is not a piercing pattern. This is a bullish engulfing pattern, which is even more powerful than a traditional piercing pattern. Okay. What about this? This violates one criteria of piercing pattern, which is the closing of the white candle is not above the midpoint of the prior black candle. So the opening is great. The white candle has opened below the low of the prior black candle. However, the closing has been poor. So this is called as an upthrust, but it is poor. So this is a strong bullish pattern. This is a very poor bullish pattern. It is bullish because there is a upthrust. The price gaps down, but it ends up closing within the black real body, but not enough to call it as a piercing pattern. Okay. So these are the little nuances that we need to know about candlesticks, which ones are piercing patterns, which ones are not, which ones are patterns which cannot be called as piercing, but they can turn out to be some other patterns. So these little things we need to learn about candlesticks, which can help us read the market charts better. So in this case, this is a daily chart of Colgate. This is an example of not a piercing pattern. So it's a nice downtrend, which is one criteria of a piercing pattern. Second criteria of a piercing pattern is the opening of the white candle should be below the low of the prior black candle, which is satisfied in this case. Third criteria, the closing should be above the midpoint of the prior black candle. So this closing should have been above this red line, which has not happened. So if we take a long position here thinking that it's a piercing pattern because it looks like a piercing pattern, then we can keep our stop loss here and expect the market to go up. That is a wrong trade to take because in the first place, it is not a piercing pattern at all. So if you would have taken a long position here, see what would have happened. Your stop loss would have been hit. The price never went up from here. So the reason for that is it was not a piercing pattern at all. Moreover, it is not confirming any prior support as well. So don't take these kind of trades. These are not correct patterns. One of the conditions is not getting met, so it is not a piercing pattern, okay? Alright, now let's have a look at a quick quiz question, okay? So is this a piercing pattern? For this, I have taken a intraday chart of Castrol. This is a 5 minutes chart, okay? So it's a nice downtrend. Okay, look at this pattern. Long black real body and a small white real body. It's a long white real body, but compared to this candle, it's a small white real body. So the question is this a piercing pattern? Answer is of course not, because although it's coming after a downtrend, it violates many conditions. One is it doesn't close above the midpoint of the black real body. Second, it doesn't open below the low of the prior black candle, okay? So there are a lot of issues with this pattern. I wouldn't take this trade saying that it's a piercing pattern. It's a small upthrust, but not enough for me to be confidently taking a long position. Now look what happens next. See here, the low of these two candles has proved to be supports because the price rallied from there. But just because it has proven support does not mean that we should have taken this trade, because if there is no pattern, irrespective of whatever else is there in the market, I do not take the trade. So the trade setup, the candle setup should be in place before I first consider taking any trade. So since this was not the piercing pattern, this was not a trade that I would take. Even though in hindsight, if we see, I should have taken the trade and aimed for this resistance level which was achieved. But no, I wouldn't take this trade because it is not a piercing pattern at all. Okay? Alright, now let us have a look at the power of a piercing pattern as we have done with the hammer and the bullish engulfing patterns. So the piercing pattern is a very powerful bullish sign, as we have been experiencing in the past few videos. Even if the piercing pattern does not confirm prior support, it still is a very powerful bullish sign. We have seen multiple charts of that situation. Now, to illustrate the power of the piercing pattern, I would like to take a weekly chart, because as discussed before, the bigger the time frame, the more probability that the trade will work out in our favor. So this is Aurobindo Pharma weekly chart. So it's a big downtrend, big because the price has almost gone from 800 to near 550. So that's a very, very prolonged downtrend in that stock. Now, if you look at these two candles, it is not a perfect piercing pattern because the white candle has not opened below the low of the black candle. However, the closing has been just above the midpoint of the black real body. So this is a variation of a piercing pattern. So it's a positive sign. Another positive sign is you look at the support area established here. This black candle was the first candle that was able to break this support and close below that. So on this black candle, the bears proved that they were in complete control of the market. But look what happens on the next candle. My coach Steve Nissen says that whenever the bears try to push the price below a support area and they are successful, but on the next candle or the next few candles, if the bears are not able to hold on to their position and they fail to maintain that prior downtrend, and if the bulls come back into the market and push the price above, then the chances are the market will rally from there, because here the bears have proved what they could do, but they could not hold on to that position. Although they broke support, this support has already been broken, but they could not hold that break of support, which is where the bulls came into the market and pushed the price up. So that is the power of the piercing pattern. This is not a bullish engulfing pattern, but still you can see how the piercing pattern has pushed the price up. Remember, these are weekly candles, so these two candles themselves are more than 15 days of, around 15 days of worth of price action. So notice that for an entire week, the bears were waging a battle against the bulls and they won that battle. But in the next week, they lost their ground and could not hold on to the battlefield, and they gave away to the bulls, which gave rise to such a long uptrend in the market. So they have broken this resistance. They have broken this resistance. They have even reached this point. So whatever be the resistance that was broken, so it was a very powerful piercing pattern, although not a perfect piercing pattern. That was the entry point. That was the stop loss, and we have the resistance areas. All of the resistance areas were hit. So that's the power of a piercing pattern. Okay? Okay, the piercing pattern as a support. So we have seen how the hammer and the the bullish engulfing pattern becomes support. Similarly, the low of the piercing pattern becomes support. So the lowest low of the piercing pattern becomes support. This we have already discussed when we were discussing the bullish engulfing pattern. So the lowest low, whichever is the lowest low of the two candles, becomes the support area. So we keep our stop loss just under the support area. In this case, the black candle's low is the lowest low, so that dotted line becomes our stop loss. So we keep our stop loss just under the dotted line. Okay? So that is how piercing pattern becomes support. We have already seen multiple examples. The purpose of this example is to reassure you that the piercing pattern's low can become a very strong support. So this is an intraday chart of Axis Bank. It's a 10-minute chart. So a nice downtrend, an imperfect or piercing pattern, or a normal piercing pattern, or a variation of a piercing pattern appearing here after three long black candles. Okay? So I take the lowest low of these two candles, which is this. So this dotted line should become support for a prolonged period of time. If we don't see that happening, we will not have the confidence to keep our stop loss below this. So look for how long, for how many candles that support has held for in this entire chart. There is not a single candle which has closed below this dotted line. They may have come near the dotted line, but they have not closed below the dotted line. Not even one candle has even crossed, forget about closing, they have not even crossed the dotted line. So if this candle would have crossed, then we would have our new support area here, but even the crossing has not happened. That is one thing. And the closing has not happened below the low of the piercing pattern. So that proves that the piercing pattern's bottom, the lowest low of the pattern, becomes a very strong support, which is a property we can use when we keep our stop loss. Okay? Alright, now let us have a look at intraday chart. I want you to have a look at this piercing pattern. Look at these two candles coming after a steep downtrend. Is this a piercing pattern? Of course it is a piercing pattern because the white candle has closed above the midpoint of the black real body. And the opening of the candle, although it is not below the low of the close of the black real body, however, we can still consider this as a variation of a piercing pattern. So this is not a perfect piercing pattern. This is a normal piercing pattern which is coming after a strong downtrend. Now, this is a 1 minute chart. Look at this candle. What is this? That's a hammer. A hammer. Low of the hammer becomes the support, but that low was broken, which means probably this hammer was not confirming any prior support. So taking a trade on that hammer might have proved to be risky or an aggressive trade. Okay? Now in this case, let's assume that the piercing pattern is confirming some prior support area. Okay? So if that is the case, then the piercing pattern is not only confirming the prior support area, but we also have a well-defined pattern, candlestick pattern, so that we can look at taking a long position here, keeping our stop loss here, and then expecting the price to go up. So in this case, the price has gone up. So probably this piercing pattern were confirming some prior support here. Probably this hammer was not confirming any prior support area. So the reason why this is a hammer, just to give you a quick revision, the lower shadow, height of the lower shadow is more than twice the height of the real body. That is why it is called as a hammer signal. This is not a perfect piercing pattern, but because of the strong closing above the midpoint of the black real body, we call it as a variation of a piercing pattern. If this candle would have closed above the opening of the previous black candle, then it would become a bullish engulfing pattern. Okay, so in this case, the trade has worked out. In fact, the price remained above the closing of the piercing pattern. Okay. Alright, now let us have a look at setting the entry and stop loss on the piercing pattern. So this is a perfect piercing pattern because the opening of the white candle is below the low of the prior black candle, and the closing is above the midpoint of the black real body. So this is the entry. We know that the low of the piercing pattern becomes support, so we keep our stop loss just under the low of the entire pattern. And remember, we are talking about the lowest low of these two candles. That is what becomes our stop loss. So if this shadow were like this, then that would become our stop loss. Okay, and this is our entry point. The close of the white candle becomes our entry point. So let's have a look at an example. This is the perfect piercing pattern. Look at the opening well below the low of the prior black candle, and the closing is almost near the open of the black candle. It is coming after a nice downtrend. 3 candles consecutively are black. This is the chart of Oil India. It's a daily time frame. So if we consider taking a long position here, that would be our entry point. Below the low of the piercing pattern, which is the open of the white candle, we keep our stop loss. And we can probably aim at this one. This is resistance 1. This would be resistance 2. Resistance lines are those lines where the bears have shown some strength, which means This is the point where the downtrend started. This is the point where the downtrend started. This is the point where again the downtrend began. Our price experienced some pressure. So this is the zone we are looking at. So if the price enters near that zone somewhere, we might look at exiting from the trade. Okay? So in this case, it has broken all the levels R1, R2, R3. All of the levels were broken here. So very positive sign given by this piercing pattern. Look what happens a few days after the piercing pattern. There is a bullish engulfing pattern here. So the white candle completely wrapping around the prior small black candle. We know bullish engulfing pattern comes after a downtrend. It's a very strong bullish pattern, even stronger than the piercing pattern. So the bullish engulfing pattern is confirming the support created by the piercing pattern. And you look at the strength of the piercing pattern, price has reached here and bounced back. But you look at the strength of the bullish engulfing pattern on the same stock, price just spiked up aggressively. So that is why we say that the low of the piercing pattern becomes support. And that support was respected by this long white candle, which completed a bullish engulfing pattern, which caused the price to go up aggressively and meet all our targets for this trade. Okay? Alright, now let us look at how do we set profit targets with the piercing pattern. We have already looked at a couple of examples of this, but let's crystallize that knowledge here. So it's a nice downtrend here and a piercing pattern. Piercing pattern because the price has not closed above the opening of the black candle. If it would have closed above that, then that would become a bullish engulfing pattern. But just by small margin, this has become a piercing pattern. I have drawn a purple dotted line at the lowest low of the two candles. So that becomes our stop loss. This is our entry. This is our target one, which is R1. This is where we have seen action from the bears. This is where we have seen actions from the bears. Okay. So we have our target 1. We have our target 2. This is a piercing pattern again. Not a perfect piercing pattern because the opening of the white candle is within the shadow of the prior black real body. Another point to consider is it is not confirming any prior support area. If this was a support, then it would have added more weight to the trade. Let's look at the reward to risk. If we look at this as the reward, if we look at this as the reward and this as the risk, it is a poor trade because it is not even 2:1. My coach Steve Nissen always says that the reward to risk should at least be 2:1. It makes sense to take the trade. Even I feel that 2:1 and 2.5:1 is a better reward to risk to begin with. Minimum we are talking about. If it is anything less than 2, I wouldn't be comfortable taking the trade. So if we are aiming for this, then our reward to risk becomes extremely satisfactory. So if I were to take an entry here, keep a stop loss here, I would watch what happens to this price at this point, at these levels. If it comfortably breaks this and closes above that target, then it is headed towards the second target. But if it stalls there for a few days and it doesn't move anywhere, then I would probably look at exiting from the trade because the price is anyways not going up to target 2. Okay? So in this case, target 1 was achieved by this candle and it was aggressively achieved. However, before the target 2 was hit, you have this long black candle confirming that that is a far-fetched dream. Target 2 is not going to be achieved by this because the black candle has completely engulfed the prior white candles, which is like a reverse of a bullish engulfing pattern. So this is a bearish engulfing pattern which we have not covered yet. We will look into that pattern as well. But that is where the problem starts. So this piercing pattern trade has proved well, even though it has not confirmed any prior support area. You look at the lows of these two candles, they tried to break the support, could not touch it, nor could they close below that support line. So the low of the piercing pattern becomes a very strong support line. Okay? Alright, now let us look at how do we set the reward to risk and whether we should take trades based on the reward to risk. So this is the kind of pattern or trade setup that I like the most. So this is a daily time frame chart. This is emphasis. So a long downtrend here. And you have a piercing pattern, a perfect piercing pattern because it's coming after a downtrend. The opening is below the low of the prior black candle. I hope I have said that enough times. The closing of the white candle is above the midpoint of the black prior real body. So that qualifies it for being a piercing pattern. It is not a bullish engulfing pattern because if this price would have closed above the opening of the prior black candle, then it would become a bullish engulfing pattern. So that is our first signal. Next, you observe here, is this a piercing pattern? Probably because it has closed just near the midpoint, but it hasn't closed above. So it is not a decisive close above the midway of the prior black candle. So I would be doubtful on this. However, if you look back in hindsight, if I am here, when I look back at this point has become support on the daily chart. Look, so many days that low has been held as support, and exactly at that price you have a piercing pattern. So that's another signal. This support line, this is not a piercing pattern, but the support created by these two candles is respected by the piercing pattern that we have now. So that is the second signal. Third thing, if you observe, the price is coming down. You look at this candle. This is the hammer. Okay? So the height of the lower shadow is more than twice the height of the real body. So that makes it a hammer, which confirms this support created by these candles plus the support created by these two candles. So you have kind of a support zone here. And even in this piercing pattern, there is no candle among these two which has closed below or within this support zone. Okay? So this black candle has closed above this support zone. This white candle has opened within the support zone but closed above the support zone. Which means that this support zone that we have drawn is a very powerful support zone. So if I were to take a trade here, I keep my stop loss just under the low of the piercing pattern. So that becomes my risk from here till here. And my reward is based on the previous high. So that's my reward. So I think it is almost a 2:1 reward to risk trade, which makes sense. Then you have this one as your R2, the previous high. So that is where the trend began, the downtrend began. It was a very strong downtrend. Okay? So I would be comfortable taking that trade, looking at these multiple signals. Even the hammer is giving us a reassurance that support zone is important. The support zone created by these two situations. Now, if you were to take the trade on that hammer, where would you keep your stop loss? Would you keep it here or would you keep it under the support zone? I would keep it under the support zone because it's a zone. There is not much distance between these two lines. So why not keep it below the prior tested? Because see, the hammer is a very powerful bullish sign, but even the support of the hammer and this entire support zone was tested here. So we have to trade intelligently. Just because there is a hammer doesn't mean that the low of the hammer always becomes support. We have to look at the whole market context. You have to look at this. We have to look at this also. If there is not much distance, why to risk the trade by keeping stop loss here? Why not keep the stop loss below the support zone itself, which was clearly tested by this piercing pattern? So in this case, the trade has worked out fine. It has managed to reach our first target, but it's nowhere near our second target. The black candle here gave us the assurance that the price is not crossing this line. And you notice that there is 650 level here, which is a round number in a sense. It ends with 50. It's not 651 or 652 or 649. It's precisely 650. That is where the bears are sitting. This is where the bears are sitting. So we achieved our target on this candle. So nice reward to risk trade. Good analysis of the previous support. Okay. Alright, we have looked at the standalone hammer. We have also looked at standalone bullish engulfing pattern. Now is the time to look at the standalone piercing pattern. The concept is the same. The standalone piercing pattern is nothing but a piercing pattern which does not confirm any prior support line. Okay? So that is why it is called as a low probability trade. Although we have seen multiple instances where a standalone pattern has resulted in a spike in the price, but we cannot guarantee that, because a piercing pattern without any prior support confirmation is a risky trade. We don't know what is going to happen next. If there is prior support confirmation, then at least we know that that's the point where the bulls are more powerful. So a standalone pattern, that is why I say that it's a low probability and it's a risky trade. For example, this is a daily chart of HCL Technologies. So it's an aggressive trade. Okay. So there is a steep downtrend and you have a piercing pattern pointed by this oval shape. Not a perfect piercing pattern because the opening of the white candle is not below the low of the prior, not below the low of the prior black candle. So it is not a perfect piercing pattern. Another thing to notice is the trading range itself is very small for both the candles. So the trading range is the difference between the high and the low. So if both of these were tall candles, then we would have had more confidence in the trade. But the candles are not very tall compared to the prior two candles. So yes, as an aggressive trader, I would take this trade, but as a conservative trader, since it is not confirming any prior support area, I would not take this trade. One negative for this kind of aggressive trade is if I am taking an entry here, I keep my stop loss here. Where is my next resistance area? Now, in Japanese candlesticks terminology, there is something called as a window. This we are not covering in this module. Window is basically a price gap. So there is no price action between these two lines that I've drawn. So it's a falling window. This price gap is called as a window. And it's a falling window because the price is falling here. So a falling window becomes resistance. And it's a very strong resistance in Japanese candlesticks terminology. This is a very important turning point. So if this is the risk, then our reward is going to be this, which is hardly 2:1. So that's a risk. That's a negative for this kind of an aggressive trade. So for those traders who do not understand the significance of a window, they might take a trade here, they might take a long position here saying that, oh, we see a piercing pattern, so we are going to take that trade and the price is going to shoot up. But they don't know that there are bears sitting here. The bears have pushed the price and they have created a nice resistance zone here. So a smart trader who understands Japanese candlesticks and has the ability to combine Japanese candlesticks signals will very well know that taking a trade here is very aggressive. It is a low probability trade and the price might get stuck between this box range. So it's a risk. Although this might become support, but the capital might get tied up in that trade, which is exactly what happened. See, there is not a single candle in this entire range from here till here. There is not a single candle which has closed below this purple dotted line, because the purple dotted line is the support created by the normal piercing pattern. So the support has held, but the price has not rallied because there is resistance here. There are bears sitting here. It's a daily chart, so it took so many days from December 2nd week till February. The price has not crossed that resistance line. So as a smart investor, smart trader, we need to know where the bears are actually sitting. So for that, we also need to know what is the significance of these gaps. And when you combine your knowledge of piercing pattern and reward to risk and the gaps all together, that is when you become a very good proficient chart reader. So I would not have taken this trade, and rightly so, because the price was stuck. If I would have taken the trade, my money would have been stuck in the market for more than 3 months. This is December, January, February. So it would have taken a long time for me to recover from this trade. So that is why I say it's an aggressive trade. It's a low probability trade. Okay? Alright, now let us look at how a piercing pattern confirms prior support. In the previous video, we looked at how a piercing pattern becomes support. Now we are looking at how a piercing pattern is confirming prior support. So a piercing pattern confirming prior support is a very strong bullish sign. We have looked at similar examples when we studied the hammer and the bullish engulfing pattern. The same concept applies here. Basically, what we are saying is that if I have a candlestick pattern which confirms prior candlestick patterns or confirms prior support area, then that adds more weight to the trade. Okay? So let's quickly have a look at an example. This is Kotak Bank daily. So the downtrend starts here. What do you have here? Now you know these signals. I don't need to explain it again. This is a hammer. The lower shadow of this candle is more than twice the height of the real body. So we know that the low of the hammer becomes support. That is why I have drawn a purple dotted line here. The market rallies from the hammer, then falls back, crashes with two black candles, and suddenly what do you have here? This is a variation of a bullish engulfing pattern, because if this candle would have opened here somewhere, here, then the white real body completely engulfs the prior black real body, which makes it a perfect bullish engulfing pattern. But in this case, since the market itself opened within the black real body, it's kind of a variation of a bullish engulfing pattern, but as powerful as a bullish engulfing pattern, because if the bears have gone short here, they are making money, and suddenly they are making money here, and suddenly if they see the price opening up, gapping up with an open, and then closing even higher above where they went short, then that's an even more negative sign for the bears. Okay? So the bears would try to cover their positions here, so which means we have a confirmation of the support created by the hammer. So the bullish engulfing pattern here is confirming the support created by the hammer. And look, after a few days of consolidation and a small downtrend, what do you have here? And if you look at this oval-shaped dotted line, this is a perfect piercing pattern because the white candle opens below the low of the prior black candle, closes very strongly above the bid point of the prior black candle. So all conditions of a piercing pattern are satisfied here. Plus you have the bullish engulfing pattern plus the hammer. So you have signal number 1, which is a piercing pattern, a perfect piercing pattern, not a normal one. Second is the bullish engulfing pattern. So piercing pattern, bullish engulfing pattern, and then the hammer pattern here, plus the confirmation of support. So this support is the fourth signal. So all of these signals coming together to give us the confidence to take that trade. However, only negative here is the reward to risk. Probably we'll have to keep our reward here. So that's our reward. That's our risk, which is less than 2:1. If we aim for here, probably that's a good reward to risk. But in this case, the only negative is the reward to risk of the trade. In this case, this target was achieved, but the reward to risk was low on that trade. Okay, so that's how a piercing pattern confirms prior support. So these are prior support areas. So now we have looked at how a piercing pattern becomes support. We have also looked at how a piercing pattern confirms prior support. This candle, although looks like a hammer, I wouldn't call it a hammer. The lower shadow is more than twice the height of the real body. However, you look at the upper shadow. For a hammer, we want the real body to be near the upper end of the trading range. We don't want it much below the highs. So although it looks like a hammer, I would not call it a hammer. But nevertheless, it is doing the job of confirming the piercing pattern's support. Okay? Alright, so now we look at the piercing pattern with price confirmation. We have looked at similar examples for hammer and the bullish engulfing pattern. Same concept applies for a piercing pattern with price confirmation. So a piercing pattern with a price confirmation is an even more bullish sign. So what we do in this is that we have a piercing pattern, then we wait for one more candle. If that candle closes above the piercing pattern's close, then we have extra bullish confirmation on that trade. So let's have a look at the daily chart of copper. This is a commodity chart. So you have a well-established support line, which is the bullish engulfing pattern. So the white candle completely engulfing the prior black candle. So we have a support line displayed by the purple dotted line here. So we have prior support confirmation because this piercing pattern is confirming the prior support area. So we have prior support confirmation. So the signal number 1 is the piercing pattern itself. Signal number 2 is the bullish engulfing pattern creating the support. Signal number 3 is our actual support line. Signal number 4 is this close. We wait for one candle to see where the market is going. So that's signal number 4. Since it is closed, although it's a small candle, but it is closed above the close of the piercing pattern. So that is signal number 4. It is giving us that price confirmation. So that makes us comfortable taking that long position. But the only problem here is if we are taking the long position here instead of here, we are buying at a higher price point. So which is reducing our reward to risk on that trade. So that would be our R1. That would be our R2. So the higher we buy, the lower is our reward, and the lower is our reward, the lower is our reward to risk on that trade. So this is a piercing pattern which not only gives prior support confirmation but also gives us the price confirmation, which is very important. But remember, the price confirmation comes at a cost, which is we are sacrificing on the reward to risk of that trade. Okay? So in this case, the trade has worked out. It's a daily chart for the next 4-5 consecutive days. The price kept going up. So this piercing pattern has worked for us because it is giving us 2 separate confirmations. Okay? Alright, now let us have a look at how to trade the piercing pattern correctly. We have looked at this model for hammer and the bullish engulfing pattern. So we start from the standalone piercing pattern. Standalone is the piercing pattern which does not confirm prior support. So that's a low probability trade. Then we increase the probability by using a piercing pattern which is confirming prior support. That increases the probability of the trade working out. Then we look for piercing pattern plus support plus price confirmation. So that further increases the probability that the trade will work out in our favor. However, the price confirmation comes at a cost. What is the cost? The cost is that our reward to risk goes down, because if we are buying at a higher price, we are increasing our risk, and if we increase our risk, our reward to risk ratio comes down because the reward level remains the same. However, we are increasing the denominator, which is the risk. So there is a cost of waiting for price confirmation, which is the reduced reward to risk. Okay? So that is the most basic way of trading the piercing pattern. Now, there are many professional traders which combine the piercing pattern with other Western indicators like support, resistance, trend lines, moving averages, Bollinger Bands, stochastics, RSI, and whatnot. But this is the most basic way of looking at a piercing pattern simply from the point of view of price action. You can use other things like volume and ADX and something like that. But this is the most basic way of looking at how to trade a piercing pattern. If you get this wrong, then everything else will go wrong. Okay? If you get this right, then you can combine this with other patterns, whichever system that you are using for your trading. So let's look at an example. I have taken a long time frame here. This is Sun TV weekly. Very powerful piercing pattern. The reason why I say it is powerful is because you have the piercing pattern which is confirming a prior support area. So this is signal number 1. Okay, the prior established support area. Signal number 2, which is the piercing pattern. Not a perfect one, because even though the closing is okay, our opening is not below the low of the prior black candle. So that is signal number 2. It is coming after a nice downtrend. So in this case, we are looking at piercing pattern plus support confirmation. We are not looking at price confirmation. See, my coach Steve Nissen says that if you have prior support confirmation, there is less need for a price confirmation. So if, let's say, if this candlestick was not there and the price turned from here itself, so there is no support area here, then the need for price confirmation goes up. But in this case, there is less need for a price confirmation because we already have the support confirmation. Now, if we decide to wait still for a price confirmation, then we'll have to buy at a higher price. So in this case, let's say we would have waited for price confirmation, then this candle, we would have had to wait for 1 week because it's a weekly candle. So we wait for a week, we wait for a close, and then we buy here. And we keep our stop loss here. So what do you think is more profitable, buying here or buying here? Of course, if we buy here, that's a nice reward to risk trade. So that's our R1. That's our R. That was our R1. That was our R2. This is R2. This is R1. So that's the resistance zone. So if we buy here, if we take a long position here, that's our risk. This is our risk, and that's our reward. So if we wait for price confirmation, then our reward is this. So our reward is reduced and our risk is increased. So it's a double effect on the reward to risk ratio. So as I mentioned in the previous slide, waiting for the price confirmation comes at a cost which is reduced reward to risk. So I wanted to show you this chart because it's a weekly time frame chart, and this is how we trade the piercing pattern at the most basic level. Notice that we are not using any Bollinger Bands or stochastics or volume or any other indicator, any other popular indicators here, even moving averages we are not using here. This is the most basic way of looking at how to trade a piercing pattern, okay? Right, now let us have a look at the quiz question, okay? So would you take this trade If yes, why? If no, why? So there's a nice downtrend here. And this is the closing of the latest candle. Just pause the video, think about this situation. It's a simple question. This is a daily chart of Imami. Just think about it. Pause the video. Would you take this trade? If yes, why? If no, why? Okay, let's look at this chart. This is pretty straightforward. The market is coming down. You have a piercing pattern. Now, two things to consider here. The closing and the opening. Let's look at the closing. Now, the closing is just near the midpoint of the prior black real body. So, if it is not a decisive close above the midpoint, it is just near the midpoint. So, that is one negative factor for this piercing pattern. Another thing to notice is that the piercing pattern is not a perfect piercing pattern because the opening of the white candle is within the shadow of the prior black candle. If it opens below the low of the black candle, then it would be a perfect piercing pattern. So that is a second negative. Third thing is probably it is not confirming any prior support area. So it is a standalone piercing pattern which we have discussed. And we know that a standalone piercing pattern trade is an aggressive trade. It is a risky trade. So probably what I could do here is I would wait for price confirmation. If I do not get support confirmation, I would probably wait and see what happens on the next day. This is a daily time frame chart. So depending on the close of the next day's candle, I can take a decision whether my bullish view is correct or not. And in any given case, my stop loss will be below the low of the piercing pattern. And this is the resistance area R1 where the bears are sitting because that is where the price has reversed previously. So if we wait for price confirmation, then we have to look at this candle. Now where has that candle closed? The candle has closed above the close of the prior white real body, or the candle has closed above the close of the piercing pattern, which is a price confirmation. If this would have closed somewhere here, which is under the piercing pattern, probably we would not take that as a price confirmation. But this candle confirmed that the bulls have taken charge of the market. So if I were to take entry here, the stop loss would still be below the low of the entire piercing pattern. So that would be the risk. And the reward would be till here, which was achieved on this candle. So that would be our reward. So I think this is a 2:1 trade approximately. That's a nice risk reward trade to aim at. And the low of this candle held as support, or the low of the piercing pattern has held as support for a lot many days in the future. Okay. So on a standalone basis, I would not take this trade because I would need more confirmations, and the pattern itself has to be perfect for me to be confident in taking the trade. However, if I wait for price confirmation, I get that extra confirmation which increases my confidence to take that trade. So I would take the trade only after a price confirmation. Okay. Alright, let's have a look at another quiz question. So this is the daily time frame chart of Glenmark. Would you take this trade and why? So let's have a look at this. The market has gone up, then again it has come down. And this is the latest candle. Okay. So think about it. Would you take this trade? If yes, then why would you take this trade? If no, why would you take this? Why would you not take this trade? If you would take this trade, where would you put your entry? Where would be your stop loss? What would be your profit target? So just pause the video, think about it, and come back to discuss it. Alright, let's have a look at this trade. Just by looking at that this market situation, I would say I would definitely take this trade. Why? Because you have a piercing pattern here which is confirming prior support to support area. It is as simple as that. There is nothing complicated about this. Okay? So let's draw this line. This is where the bulls came back into the market. So let's draw this line. This is the precise support area. As a professional trader, you must know exactly how to draw a support line. So at 575, the market has reversed. Now, is this candle a hammer? Probably not, because the lower shadow is not more than twice the height of the real body, plus the real body is not near the upper end of the trading range. If it should have been slightly above. I don't like this small upper shadow. Okay, so I wouldn't say that it is a perfect hammer. It looks like a hammer. It is close to being a hammer. But I wouldn't qualify it as a hammer because of that upper shadow. Other thing to notice is that probably the trend has been very small. So that would be another reason this cannot be called as a hammer, because the hammer must come after a downtrend. Even if it's a short-term downtrend, it is okay. But on a daily chart, if you see consecutive 5-6 days, you have flat market, then that cannot be called as a trend. So although this candle is not a hammer, yet the price has turned significantly there. So that's our support point. So if you observe, after that candle, you have 1, 2, 3, 4, 5, 6 consecutive bullish candles on a daily chart. So for 6 consecutive days, the market has been rising. Then the market starts falling from there. And what do you have here after a downtrend? A piercing pattern. Not a perfect piercing pattern. Why? We have discussed this multiple times. The opening is not below the low of the prior black candle. So if the opening would have been below this low, that would be a perfect piercing pattern. And the closing is just near the midpoint. So it has, if it was slightly above that, then I would be more comfortable. But nonetheless, it is a piercing pattern. The low of the piercing pattern is confirming the support created by this line. So we qualify it as a piercing pattern, which is giving us a support confirmation, which means that we don't need to wait for a price confirmation. So if I were to take this trade, I will put my entry here. Now the question is, where do you keep the stop loss? Do you keep it under the low of the piercing pattern or under the low of this support area? So I will keep my stop loss below, because there is not much distance between the two. What if the price just falls down and comes back again, because this support holds and this support doesn't? So to have that extra safety, we put our stop loss under this low. Okay, just under that low. So that would be our stop loss, and we will aim at this resistance. So in Japanese candlesticks, we have discussed prior that this gap, there is a price gap here. This gap is called as a window. And in this case, it's a falling window because the market has come down, which is a continuation pattern. So the falling window becomes resistance. The entire window becomes resistance. So that's our resistance, that's our profit target. In this case, the upper line of the window becomes a stronger resistance than the lower line of the window. So entry, stop loss, profit target. That is how I would place the trade. And rightly so in this case, as you can see, the target has been achieved within a few days. It's not many days from here till here, probably 2 to 3 weeks. That's it. So because this piercing pattern was confirming prior support area, we have a good signal. We don't need to wait for a price confirmation, and we can wait for the price to go up. And our stop loss was never hit during this entire period from first week of October till first week of November. Our stop loss was not hit. So that is how I would take this trade. Okay.